On this special episode of Cup of Joe, Nick and Mike are joined by special guest Patrick Dempsey from Nucor to discuss lead times, pricing trends, and making steel from modular nuclear reactors. You won't want to miss a minute of this engaging discussion.
Hello, welcome into this special edition episode, if you will, of Cup of Joe. I'm Mike Carrazzo, the content manager here at Ryerson, joined always by Nick Webb, director of risk management, commodities hedging. Nick, how are you?
Mike, I'm doing great. How are you doing today?
Doing good. We're pleased to be joined by a special guest here. Patrick Dempsey, the general manager commercial at Nucor Corp, is graciously offered to join us here and address a few questions about the market. Patrick, welcome to Cup of Joe. Thanks for coming.
Yeah, thanks, Nick. Mike, really appreciate you asking me to be on. Looking forward to the day.
Pleasure. We're excited for it. Yeah, as a quick backstory, I don't know if this has been shared yet, but a couple of weeks ago, I came across a headline suggesting that Nucor was going to start a partnership. It might have been a memorandum of understanding, partnership, however it was worded, with, I believe the company is called NuScale, to make modular nuclear reactors to actually power the production of steel. And when I saw that, I don't know how many people on Cup of Joe know this, but I'm kind of a nuclear geek, and I'm a big proponent of that being sort of at least one of the components of the energy infrastructure. And so I got really excited when I saw that, and I reached out to Mike Carrazzo, and I was like, is there any way we can get somebody from Nucor on to talk about this topic? Because it's a really cool, unique topic that's, pretty futuristic, pretty forward thinking. I think a very good idea. And I'm not trying to blow smoke or anything, but I think it's certainly the right move and a very forward-looking move, and certainly fits, in my opinion, the green narrative. So yeah, really glad we were able to set this up, and that will at one point be part of the conversation here today.
Yeah, we're excited to talk about it. We certainly believe in the future of nuclear to help us with our decarb efforts. So that'll be something I look forward to jumping into with you all.
I guess before we dive into that, Patrick, could you give us a little background, your role at Nucor, how long you've been there, all the good stuff?
Yeah, be happy to. So this is year 16 for me. Typical Nucor story. I've had an opportunity to kind of bounce around through a few different Nucor locations. I started my career with Nucor actually full-time in 2007, but I was an intern when I was in college. My dad was a Nucor teammate up until just a few weeks ago. So he retired after about 30 years. He was a machinist down at our Nucor Berkeley facility. So when I say steel is in my blood, I certainly mean it. And it's been a real honor to move through the organization. I spent a handful of years at our Darlington mill, which was the first mill that Nucor built to really supply our Volcraft decking operation, joist and decking operation in Florence, South Carolina. I spent some time at Nucor Berkeley, which is a flat roll and beam facility that we have outside of Charleston. Spent a little time in Atlanta in outside sales. Had the opportunity to move up to Nucor Auburn, which is a bar mill outside of Syracuse. So I got introduced to snow in a really meaningful way. And then went to Memphis and was the sales manager over at Nucor Yamato from 2019 to 21 until joining the corporate team here a couple of years ago. So really blessed and humbled to have this opportunity.
And there was probably like a 4-year hiatus in there when you were on Grey's Anatomy, right?
Yeah, that's right. Well, the funny part is, you'll love this. So I worked for a few years at Nucor Berkeley, as I described, and part of that mill makes beam, and I was representing the beam group, and I had a few folks affectionately call me McBeamy. Instead of McDreamy, which was great, right? That's a great nickname to have in a steel mill. You get a lot of street cred with McBeamy out there. My dad was real proud.
Love that.
That's amazing, and it is really cool. I mean, I know we've got a number of colleagues at Ryerson as well, where it seems like metal and steel generally is in their blood, and I think that's a really neat feature of our industry. Let's go ahead and kick it off. We'll start off. We'll push the nuclear and decarbonization stuff to the back end, but start off with kind of a high level overview of North American metal markets, specifically steel. We on Cup of Joe oftentimes cover macroeconomic conditions. We cover a lot of different commodities, and there are a lot of mixed signals out there. So we're curious from a Nucor perspective, how are you seeing things looking for back half of the year into the end of 2023?
Yeah, great question. One we get, a lot. And it is interesting as you described. Certainly, if you read the headlines, there's enough poor sentiment out there to lead to some concern. But I got to tell you, when we analyze the markets that we serve and the customers that we have built relationships with, man, there's a lot of resiliency in the macroeconomic backdrop, or at least the end markets that we serve. When we think about what's happening in energy, not just with fossil fuels in the OCTG market specifically, but also in the non-renewable space with solar and wind. That has certainly been, a bright spot. In addition to automotive, I think the build forecast is expected to be up about 1 million tons year over year. Also, we're starting to see a real benefit from a couple of different things. Reshoring that really started taking place right after COVID, which led to some of the major federal bills, the CHIPS Act, the IRA. Those things are really beginning to have meaningful impact. And they touch our company in different ways. As you guys know, Nucor doesn't just make flat roll, despite that's kind of my purview. We're in construction products as well as other products that would serve these industries. So yeah, all things considered, we look at overall GDP as being marginally up, and we would expect and predict that overall for the year that steel consumption will be up marginally. So not significant growth year over year, but at the same time, not weak by any means.
And probably worth noting, if you're seeing, low single digit growth, that's on a comp that's pretty darn strong over the last year or two. I was actually looking at some construction spending data across residential, non-res, and even manufacturing. And in all three cases, you pull up like a 2005 to current chart. The last couple of years has just gone parabolic. And I think some of that potentially is being aided by what you mentioned, the CHIPS Act, the IRA, those infrastructure bills. So yeah, pretty exciting stuff for the industry, I think.
Patrick, you mentioned the nearshoring really kind of being a catalyst too. How do you see that playing out even further for the rest of the year? More efforts around some of the nearshoring efforts.
Yeah, no question. I mean, I think I still think, as a nation, we have an opportunity in things like pharmaceuticals. You guys probably remember right during the middle of COVID where, everybody was talking about penicillin and the fact that we don't make that here. But I would tell you, even folks like Dell, they are looking at reshoring, parts of their computer manufacturing into the USMCA region. So it's not necessarily all here. Some of it might be in Mexico, some of it may be in Canada. But yeah, we see that as a significant opportunity. I mean, we know what happened with semiconductor chips, and I think the ability to localize supply chains has really been amplified, and I don't see that pulling back.
Excellent. So keeping the topic on sort of market conditions, market forecasts, we polled our audience on the last cup of Joe to ask them what topic they most wanted to hear about. And Mike, correct me if I'm wrong or add anything you'd like to, but one of the key things they want to touch on was what's really impacting lead times across various products as you see it right now. So I guess we're talking specifically across steel products. How are you seeing lead times trending at the moment?
Yeah, I always, when I step back and think about, well, what ultimately drives lead times? I mean, for the most part, and I don't mean to be overly simplistic, but demand drives lead times. I mean, when we see strong demand activity, then we generally have lead times that correspond with that. Now, there's also an element of supply. During certain outage seasons, we oftentimes take outages in certain periods of time that might impact our lead times. But I would categorize them as stable and at a healthy rate at this point, fellas. So, but again, I look to long term when we see demand, as I shared earlier, being strong, that we generally predict and anticipate that lead times would sort of have a commensurate reaction to where the demand picture is.
On that same topic, or on a similar vein of that topic, I've wrongly been suggesting that plate prices and sheet prices should converge at some point. And for the last 6 months, I've been glaringly wrong as plate prices continue to levitate on a relative basis, while arguably sheet prices are coming down, have been coming down for the last couple of weeks and months. How do you explain from your perspective that relative strength within the plate market?
Yeah, and not to be too tongue in cheek, but part of me sort of goes, well, why would they? converge, almost like a contrarian approach to that question. Look, in my view, it's largely, and I will maybe bifurcate this into what I would call a discrete plate versus, coil product. It certainly stands to reason that those products wouldn't necessarily overly correlate because, man, the dynamics of those markets are different. You have different competitors. Oftentimes you have different end users. Certainly the import scenario, the countries that could be sending in product are different between the two countries, or excuse me, two products. So, I got to tell you, I guess I just sort of look at it no different than how rebar and long products, or excuse me, rebar and flat products don't always correlate. I think there are different drivers in each of those products and end markets that determine sort of the appropriate price point for those items.
Do you think there could be a potential end market that is driving incremental strength in plate relative to other products, particularly sheet? Maybe name wind farms, things like that.
Yeah, I mean, no doubt. We think onshore and offshore wind over time is going to have a significant impact. But immediately we're seeing shipbuilding activity being really strong. We're also seeing heavy equipment. The heavy equipment industry is robust right now. So there's no question that some of the end use applications that our plate product go into are really strong in conjunction with what I shared earlier in the podcast on flat roll demand.
Infrastructure projects too, right? You mentioned construction there, but obviously that's a big role in kind of the infrastructure build too, right?
Yeah. Bridge and highway activity is really strong, and you guys, it's a shame at times that we have to wait for a catastrophe in order to make pretty significant investments in our country's infrastructure. So we're optimistic that given some of the new bills that we've talked about already, that's going to change, and we are starting to see that activity, which also supports sort of some of what we're talking about with plate.
Mm-hmm.
Yeah, and you mentioned the import aspect of the plate market specifically, Mike. I think on the last Cup of Joe we actually talked about the dynamic whereby some of the import quotas are actually beginning to bite a little bit,
right,
to the extent that certain importers are actually getting to the point already as we sit here in June. They're getting to the point where they're saying we may not be able to bring in more tons because we've already hit our quota. So that's a fairly interesting dynamic as well. So slightly different topic, but broadly speaking, when we think about electric arc furnaces, we think about recycling. Obviously, from a raw material standpoint, more and more, at least in North America, more and more production is going EAF and scrap based from a raw material standpoint. Do you foresee any hiccups in supply chains, any potential shortages, deficits in that space as more and more mills ramp up over the coming years?
Yeah, it's a question that we field pretty regularly, and frankly, it seems to be one that's raised often by our competitors that produce steel using the extractive method. Ironically enough, I got to tell you, we've spent decades executing on a strategy to have greater control over our raw material sources. In addition, I mean, just if you look at the total supply-demand landscape on raw materials, I mean, we still as a country export a fair amount of scrap. So we certainly believe that some of those dynamics likely change. But I would point to some of the strategies that we've employed with respect to direct reduced iron. We have 2 DRI plants, one in Trinidad and Tobago and one in Louisiana. And that enables us to have not only some control, but also flexibility. So if we think back to when Russia invaded Ukraine, at that point, we immediately stopped all shipments of pig iron from Russia. And we were able to source, other metallics from other countries and through our own network. So yeah, we don't share the same concerns that there's going to be this shortage of raw materials to satisfy our demands for EAF steelmaking.
And not to put words in your mouth, but I'll ask it anyways. Could be the suggestion that others who don't have that diversification may have different issues, different concerns to worry about in the coming years.
Yeah.
Okay, excellent. So shifting gears to the topic that I mentioned at the onset, which kind of inspired this discussion altogether, the decarbonization, the plans to. There were two headlines over the last, I think, 2 or 3 weeks. The first one being the memorandum of understanding with NuScale, and that's regarding NuScale setting up, designing modular nuclear reactors at either one of your facilities or maybe many of your facilities.
Yeah.
And then secondarily, there was the partnership or the agreement with ExxonMobil, which for those who don't know, I've been living under a rock. ExxonMobil, traditionally a fossil fuel company, partnering with them on, I think it was carbon sequestration related matters.
Yeah.
You mind talking about, those two topics in a little more detail?
Yeah. No, I'm happy to. We're really excited about both of the projects. As we sit here today, being one of the world's lowest GHG emission steel producers, we're really proud of our performance today, but we're not going to rest on our laurels. We're going to continue to invest in technology like what we're describing with NuScale and the relationship with ExxonMobil on carbon sequestration. With NuScale, you did a really nice job of summarizing. We have entered into an MOU to explore the idea of these small-scale nuclear reactors that would be on site at some of our locations to help power some of those facilities. So we're really excited about NuScale. And then as I pivot to the relationship with ExxonMobil, carbon sequestration for our plant in Louisiana, which is that direct reduced iron facility, and direct reduced iron is what I was referring to with respect to our raw material strategy. So by having carbon sequestration, this will enable that Louisiana plant to provide some of the lowest embodied carbon DRI on the planet. So we are anxious and excited, and candidly, we're going to continue to explore opportunities where we can, at scale, help reduce all of our emissions to get to where we ultimately believe is the right thing for the world and for Nucor to be positioned to take advantage and capture what our customers are asking us.
Would that, Patrick, be in so companies that need to reduce their carbon footprint buying from partners that are a little bit more energy efficient? Is that's big news on that front, right?
Yeah, no question. We're certainly seeing it from a variety of different industries where they're conscious in how they source and what their supply chain looks like. Generally, our steel is scope 3 for most of our customers. So whether that's in auto or in heavy equipment or in the consumer durables space, there's more and more focus and conversation around what's your plan, and not just, hey, set out a target, but how are you going to get to that target? What's realistic? What are you doing today, and what are you going to do tomorrow to achieve some of the goals that have been shared? So we're excited about those two relationships and feel like they can have meaningful impact on our total emissions profile.
So you mentioned the Louisiana plant for the carbon sequestration specifically. Do you have any plans, and I don't know if this is something you can specifically share yet, but do you have any plans on, are you going to start the NuScale MOU at one particular facility, or is the plan to kind of roll it out to all the different facilities at one fell swoop?
Yeah, we are looking at several facilities, but Nick haven't or I'm not prepared to share kind of what those facilities are quite yet. But
sure.
Yeah, we're certainly analyzing that. That's part of the MOU, is to really evaluate where that would make sense and where that would have the greatest impact. And also, we certainly want to make sure that we supply NuScale, because that build of the small nuclear reactors requires steel. And so we're also going to be looking at supplying NuScale with our net zero product, which is trademarked as Econic. So we're really excited about that whole life cycle of being able to supply our facilities, and then also those facilities being able to supply steel into the build out of NuScale.